right, everybody. So it looks like we have 12 people watching from probably different places because we're actually on YouTube, D Live, I think Twitch, Facebook, and maybe Twitter if Periscope is still up, but they were going to be shutting things down. So let me go and turn up the desktop audio so our guys can speak here in just a second. And I'll scroll down so you can actually see who's talking. Give me just a second to do that. And we are in the events room tonight. So if anybody wants to be a part of the chat, at either Mike from Maine, Conjecture in there, TC in there, and you should be able to hop right on in and kind of join the discussion. So tonight, guys, kind of what I want to discuss is many of us saw the John Adams interview, and there's some interesting stuff going on here, right? And we got into a bit of a discussion. Now, we know unallocated metals are safe or not safe. Everyone here knows that. Guys, let's get our opinions on those allocated metals and the possibilities that there could be some funny business going on there. What do you guys think?
Well, obviously,
go ahead, Mike.
Obviously, allocated metals doesn't mean what it says on the piece of paper that it comes on, you know.
Well, it was supposed to, Mike, but they fractionally reserved their metals away, and now they have nothing left in their, allocated pools.
It's like this guy, he bought 17,000 ounces, he expected these 17,000 ounce bars to be there, because they were allocated. That means the bars were physically kept away from the stuff that should be going out and in and out and in and out. It's the stuff that stays. He shouldn't have like 2 Perth Mint bars and the rest recent Chinese made bars.
Yeah.
That didn't exist when he bought the silver in the first place.
Yeah, I gotta say that would have really ticked me off right there. If I'm buying from any company, not just Perth Mint, right? If I'm buying from any company at all, and whether I'm trying to get my allocated metal sent to me unallocated, or I'm just buying off your website, the last thing that I want to receive in the mail is a bar that was made in China. Now, we actually had the question during the interview, guys. Why didn't Perth Mint, because they have the ability to do it, why didn't they just, melt down the metals and make their bars with the Chinese silver? That would have been a little bit better. My only explanation is demand is too high, and they can't do that right now.
Well, the thing is they have to do an assay.
Okay.
Of each bar. So, that's a little bit extra cost. That takes a little extra time. They have to physically dissolve it in acid, weigh it, get an exact measurement or as precise as they can, and then dissolve it in acid, turn it to powder, remelt it, and reweigh it and see if it comes out the same as when it went in. And then you'll say, well, I guess the whole bar is good, so that one's good.
Yeah, so before we go to all that trouble, though, Mike, holy crap. They're pulling in Chinese metal into the Perth Mint for metal that people have been holding for years in allocated pools.
Right. You bought the metal years ago. It should have been there for years. That's the problem.
That's right.
It's not there. That's the problem.
Can I ask more?
And like, just one more thing. Like the LBMA about a year ago, maybe even like 8 months ago, they decided to, add these refineries, like he said, in China and Russia and other parts of the world. Bars that were not on the approved LBMA list. Well, the COMEX 8 months ago decided, hey, that's a good idea what the LBMA just did because there ain't no metal. Don't let the secret out. So they approved every bar that LBMA approved, even the new ones from China and Russia and that. I'm not saying that these refineries are disreputable or anything, but they were not approved for LBMA, and they weren't approved for COMEX bars. Now they all are. The reason is because they saw this coming, and they knew they didn't have the silver, and we need new refiners right now. We need the new supply.
So I just need to ask some basic questions after watching all these interviews, because I'm sure there's other peoples out there who would have similar questions. Why does any of this matter? Why does the fact that unallocated accounts are not having actually allocated metals behind them matter? Of course they don't have actually allocated metals behind them. They're unallocated.
Well, so, you have allocated accounts and unallocated accounts. Now, the allocated accounts are supposed to be there physically. You know, anytime you want them, you get them.
Right. That I think that part's understood. Yeah. What I'm trying to get across here is what is the consequential outcome of unallocated accounts actually being unallocated?
Well, you have to wait longer for your metal. You know, you got to wait for it to come in existence in the first place. Because when you're buying unallocated metal, you're assuming you're buying future mine supply
you know,
at the very least.
Let me put this another way. So if I told you the sky was falling, you'd be worried because the sky's above your head. If I told you the ocean was falling, you probably wouldn't give a shit. So what I'm trying to tell you is, why does it matter that unallocated accounts are defaulting as unallocated? Why does that actually matter to me? I'm a guy. I'm an investor.
Why are allocated accounts?
No. Why are unallocated accounts that don't have allocated metals?
Right.
Which should come as no surprise to anybody who understands what those two words mean.
Right.
Matter to me as an investor.
Because you'll never be able to get the silver. In normal circumstances, you would be able to get the silver. But as we've said before, this only works as long as there isn't a huge demand, right? If everybody calls up this place that's been moving your metals around to who knows how many different people, if everybody calls up at the same time, they don't have the silver to give you. And that's what makes me nervous about people that have allocated accounts, is because if those unallocated accounts are drained of silver, they're going to start going to those allocated accounts and praying to God that those people don't pick up the phone and demand their physical silver. So as you, for you, it doesn't matter to you at all, Matt, that because you're all about physical, I would assume. So for you, no, it doesn't matter, but this is screaming at us that there might not be enough silver in the markets right now. And we're seeing this from wholesalers as well.
Okay.
They're having difficulties get it, right?
Okay.
And you're getting it from people that have allocated accounts, and they're getting their metal, and it's not the metal they put in.
Okay, so the idea here for the uninformed is that this is a PSA. This is a public service announcement to anybody who is unallocated. You may want to become allocated because the idea that the value you thought you had in those unallocated accounts is not really there. And so I'm not trying to be a jerk. I keep doing this.
No,
because
we like
I think
this.
I think it's really important that you guys articulate why this stuff matters.
But even the allocated accounts are suspect. That's the problem now.
Well, yeah, sure. But again, the idea is why it matters. So the reason it evidently matters is because if I'm an investor who has one of these unallocated accounts, then I may have lost some money in that. Yeah. I think I have money in metal that doesn't exist.
Another way you'd lose money is, say you buy at a nice low price, like $15. The price jumps up to $30. You want to sell your allocated account, whatever's in there, to earn your $15 an ounce profit. Wow. When you go there, they say, sorry, you don't have it. Well, you just lost your $15 profit because you can't get the physical silver to sell it.
Yeah. I think the problem is
you bought it.
You're thinking you're buying the right
to
silver, a pile of silver, when really you're buying the right to an invisible pile of silver.
Yeah.
And a lot of people don't know that when they're going into it, right? It's kind of like the timeshare house sort of salesman of like, yeah, we've got this great property up in the mountains or maybe out on this ocean front somewhere, and you'll be able to get it any time, and you know, just schedule your date in and we'll make sure that you get in there. And then it turns out you're just wasting a bunch of money for something that you can hardly ever go to anyway. I was kind of joking about that earlier with someone. It's kind of like the timeshare Ponzi scheme.
Timeshare, yeah.
And the real problem that bothers me is the CEO's on TV claiming he has 4 tons of silver.
Yeah.
So that really doesn't add up, right?
Yeah, I tend not to worry about the people who make false claims on television, as there's a lot of channels full of that. But I guess the driving point to the person sitting at home who might be listening to this is that if you thought the word unallocated meant something different than it actually means, right? When you buy unallocated food or whatever, if you think the word unallocated means something different, you should probably buy SLV or PSLV or something else that allows you the liquidity to actually trade and get your money back, however you want to look at that, right? Yeah. Because an unallocated account at the Perth Mint is not a good idea. I think John Adams could make a video that said just that and be done, but there's a lot more to talk about in terms of the other people who do this. So you guys have that, but I would just say, like, that's the point. The point is, don't invest in something unallocated and think it's allocated. The word pretty much kind of describes what you're doing to yourself.
Yeah, well, that's kind of why I think it's important to bring a lot of this up so people have an understanding of the words, because I don't know if people understood. Go ahead, Conjecture. Sorry.
Well, there's the other thing too. When you go pick up your metal, you got to pay the fabrication costs and all that. Well, he made a point. Okay, I got these 2 bars from the Perth Mint. Sure, I'll pay the fabrication costs for those. The regular. Now these other 15 bars from the Chinese Mint, fabrication costs are a lot less. I don't want to pay full fabrication costs for those, but guess what? The bankers say you have to. But yet, for years, you thought you had 17,000 ounce Perth Mint bars, and you've been paying storage fees on silver that wasn't even there.
Yeah, but MFM,
you're paying storage fees for 17,000 ounces, but you only had 2,000 in that allocated account. We're talking an allocated account.
There's no bankers involved in that. That's actually just the Mint. That's a terms of a service agreement with the Mint.
Yeah, well, there's bankers involved at one point somewhere with that Mint. You can bet your hands on there.
Well, when the Mint defaults on allocated or unallocated, you can bet the bank gets involved at that point, because they're going to have to afford the money to pay you off to get you out of those contracts.
I was gonna say you're absolutely right about that part, but there's no banker involved in hiding your silver away in that use.
No, I'm not.
I agree.
There's a banker, but they're charging you fees like a banker would.
The Mint's just tricked you to pay for their production. I mean, that's what it comes
their
down
storage
to.
fees and their storage fees
Well, that's
for
what I
silver
mean by
you didn't
production.
even have there. Yeah,
that's what I mean by production. Their capacity to produce, you're paying for them. They're going to take your money. They don't have actual metal, but that's like you own a share in the company. It's another way to look at it.
Yeah.
Hey, Arthur was going to chime in on something. Conjecture, come in, please.
Yeah, I would love to hear from Conjecture.
What I was going to throw out there is that not only with these allocated accounts, unallocated and allocated, they also have eligible and ineligible. If you listen to John Adams, it was more than 2 clients who they had unallocated accounts. They paid the fabrication costs, and then they said, okay, they wait 2 weeks for it to all get fabricated, and they said, okay, and now I want my silver delivered. And they said, okay, we can't do that because yours is in the ineligible category, which they didn't tell them before they ordered, got the fabrication done. But worse than that, it's just like the COMEX. When the COMEX doesn't want to give you silver, they just say, oh, yeah, well, you're in the ineligible category.
Well, to make you keep paying for it,
Again,
over and over again. Yeah.
Again, I think that's just the terms of a service agreement in terms of the people who didn't fully appreciate the investment that they were making, right?
Yeah.
Again, if I told you, hey, I would like to sell you right now, right? I've opened a Mint. I would like to sell you some unallocated Coca-Cola.
Well, our
right? Would
investors
you buy it? I mean, how crazy would you be to buy that?
Yeah, but do investors usually have to bring a prospectus to their lawyer to read before they invest?
I don't know, but again, that has nothing to do with the question I'm asking. If the basis of a payment is such, then don't do it, right? If you're buying something that isn't actually allocated as a commodity, what kind of investment are you making, eligible or ineligible? So to the public service announcement part of this, the idea is if you want to own a physical thing, don't buy a non-physical thing.
Yeah.
It's the old adage: if it ain't in your hand, you don't own it.
Yeah. So I would like to actually throw some gasoline on that fire. And rather than say if you don't hold it, you don't own it, I want to tell you what the banks say when you get into a paper product for gold or silver. What they tell you, and this is what they will tell you, by the way, you're buying exposure to the price of gold and silver.
Yeah.
Exposure. That's right. That's what you're paying all the money for. You can't get metal out of that piece of paper, and many occasions you can't do that. So Matt is 100% correct. I need to echo what he said again. If you want precious metals, just get precious metals. Don't deal in the paper markets unless you absolutely have to for your 401k or something. But try to go into PSLV if you have to. Go ahead.
Right. No, I was just going to say, to echo that, the people who are playing in the paper market are the people who are dealing in the hundred of millions of ounces or whatever, hedging against it. I'm a producer, or I'm a bullion bank, and I have 100 billion long sitting in my whatever room across the street. So I need to hedge that. That's why they're in the paper market. They don't want to worry about production. They don't want to worry about shipping. They don't want to worry about the other aspects of the business that are involved with holding the actual metal. So if you want, quote unquote, exposure to the price without the fees, the shipping, the counterparty risk, and basis risk, then you just buy the metal and you're long it, and those things don't matter. Mm-hmm. If those things do matter to you, then go get a futures contract and deal with all those other counterbalancing consequences.
Why do you guys think that we're seeing maybe so many normal everyday people get into these paper markets? Because when I was a child, I probably would have thought that that's just for the monopoly man, right? And maybe it's because technology has made this stuff easier. It's convenient for people. These could be possibilities. But I am worried that the normal, just middle class family could end up getting screwed over. And I'm not saying today, but what happens tomorrow? What happens when we go through another, not a recession, but a depression? And these people cannot get their metals in hand. And this might be a bit exaggerated, but if we're dealing with extreme hyperinflation, the liquidating the account and getting cash for it doesn't really mean anything if you wanted to actually hold the metals, right?
Yeah, couple things there I would just share you that are anecdotal, and they are not statistical. They are anecdotal. But like, I've had more than a few, and this is real. I've had more than a few people who are under the age of 16 who are that are in my family or friend of a family or whatever, that are coming to me for financial advice about how to invest in the stock market. These are people who are 14, 13 years old.
Well, now we know that the stock market's about to roll over. When the shoe shine boys are investing money, and the chorus girls are investing money. Yeah.
It's so to Fringe's point, it's really about the frictionlessness provided in those paper markets. Whether or not that says anything about the commodities markets or other bond market, other markets, I don't know. But anecdotally, to me, those are interesting indicators about what that means for things like the middle class. Because if I was 13 and someone showed me how to trade, that would probably affect how I viewed everything from there go forward in the rest of my life.
The funny thing is, you should probably ask those 13-year-olds what they want to invest in, because it's probably going to go up.
You know what, though?
I don't know.
We've talked about... Oh, go ahead, Conjecture. I'm sorry.
Oh, I was just going to make the joke that, is there really a bad investment when everything's going up?
No, well, so
that's what I was about to point out.
Actually, Conjecture's point is true in another way. When you're 13, there almost is no bad investment. The other way, it depends on the investor. If you're 13 years old, you can afford to lose everything that you've just invested. You have 80 years to make that money back or whatever.
Right.
So I would actually promote the opposite. I think these people that are 13 or 14, this is a great time for them to invest, to lose money or win, to make money, whatever it is, but to learn those lessons, because they're not going to want to learn them when they're 60.
Yeah.
Well, I think it's almost like waves of hype, and the kids usually start it, and then it's usually followed by like Bitcoin and even Tesla, like all of them, right? Apple. It's like kids started it, and then big money followed. And then the wave just got bigger.
He is right when he says, that it's going to affect the kids the way that they think of money and think of the markets for the rest of their lives if they get in earlier. And the earlier you get in, well, you make your mistakes early.
Mm-hmm.
You learn your lessons early. And like you said, you haven't invested that much time and money to learn those make those mistakes and learn those lessons. Then if you made the mistake at, say, 58 years old, just before you're retiring, then a mistake can cost a lot of money.
Yeah.
So to sort of touch on what Chaos said, and then I've been talking a lot, so I'll hang back, but sort of to touch on what Chaos said about hype, right? Like when I was younger, the idea of talking to your friends on a telephone, or they would three-way a friend, or whatever it was sort of hyped up, right? That's where all the drama and the hype and the gossip and all that stuff happened. Today, that hype has evolved into a capacity that I can do it sitting on an app on my Mac Mini that I'm talking to all you guys on. So hype can become reality. Don't discount that either.
Well, it's
just saying.
It's more about what's trending socially now than like logistics and like actual revenues the company's bringing in. It basically all just revolves about what's trending on social media and stuff, right? It's like we kind of live in a twilight zone. It's scary.
I don't argue in favor of or against. I would just simply agree with you that sentiment has a completely different disposition in terms of how people make and form their investment theses.
Mm-hmm. What happens though, Matt, let's get your opinion on this, because some of the legal wording into, let's say, these contracts that people got into had magically changed overnight. This is something that also kind of makes me feel uncomfortable, because let's say that I liked the contract in the beginning, whether it be allocated or unallocated metals. Let's say, okay, I can deal with that in their terms of services. Well, what happens when they change that? Because nobody gave me a notice. You didn't give me time to get out or move around from it. So what's kind of your opinion on that for people that maybe did read?
I kind of think this goes, again, directly to get to silver and precious metals. I think this goes to like the prospectus change for SLV as an example. So I'll use that as my example. If you're invested in something, SLV, or an unallocated account at the Perthman, which is, in my view, way more sort of to the left of SLV. But anyway, using SLV. If you invest in that, you better damn well understand what the hell you're doing. Whether you did it through Schwab, or you did it through Robinhood, or you do it through the Perthman and someone talked you into it. If you don't understand the investments you're making, then you already made a mistake. Yeah. So first understand what you're investing in. And then if you do, you might not get noticed. So it's up to you to kind of be responsible about that investment, in which case, if they change the nature of the investment, you ought to be reviewing that on some sort of already pre-existing basis. Maybe do it once a month, maybe do it once 6 months, maybe do it once a quarter. So my view would be, it is a even though people may not like that.
No, you have to take responsibility for yourself and know at any time this could go south.
It is responsible action of a person who's invested their money to do that kind of perspective review. And when they do, and they see, holy shit, what is this? They changed the rules on me. Sell. If you don't no longer agree with the investment you're in, and you fully understand it and don't agree, sell. Just like John Adams is telling you, just like Fringe is telling you, just like TC is telling you, sell, go to a physical account, get out of unallocated and go to allocated, or sell completely out of that and move into an investment thesis that you can agree with. If you're not doing that, then you're already making a mistake, like, right? So I
like what
bringing
you
up a good point. I wonder. Oh, I'm sorry. Go ahead, Chaos.
I was just gonna mention, I like what you said is that they are changing the rules, right? And they're kind of changing the rules in the fine print, and you have to be watching it to even notice it.
I wonder how many folks don't even know the prospectus has changed that have SLV in their 401ks. You know, they probably aren't even looking this stuff up. I wonder if they're contacting their customers to let them know there's been a change. That's a good point, Matt. Thank you for bringing that up.
They're doing it very sneakily, right?
Yeah,
yes, they are.
The most I would argue and contend that the most well thought out investor isn't going to notice a handful of words to change in an individual perspective of a prospectus of a series of investments they have. So you're absolutely right in the sense that they're kind of changing small print that most people won't notice. But this is the thing to highlight, to take out your highlighter marker and kind of go over, right? The small print is what it's all about. The small print can change. And so if you're not watching that, and if you're not making your bets based on the small print, then you're making the wrong bets.
Well, and this is why it's just so much easier to go and just buy physical silver that you keep somewhere that you think is safe.
Tell them,
right?
French.
Now, this puts a lot of responsibility on yourself, because let's say that you are lucky enough, and I guess we've seen this now with the silver squeeze, where we've got newcomers coming in and they're dropping 5, 10, 20 grand on physical silver, which is amazing. Props to you guys. I don't know if I'd have the guts to do that. But now you got to think about, where the hell am I going to put this? Because it doesn't feel good for it to just be sitting in your apartment. And I definitely get that. Maybe that's some of the lure to these paper contracts. But again, that's third-party risk that you have no control of. You've got to find a way to be responsible for yourself and your own assets. Understand what you're getting into. You know, this is not just a joke. Whenever I say you can go bury it in your yard somewhere, go bury it in the national forest somewhere. Some of our members like to say nighttime gardening. I'm all for it. Double wrap that thing in a vacuum seal bag, and you're good to go. It doesn't hurt anything.
Yeah, the most important tool that the most illiterate investor can have is to learn how to do the most basic cost-benefit analysis. If they can learn how to do that, then they'll be able to survive all these different changes. Because if you can cost-benefit analysis, who am I inviting into my house that might see this silver? All right. If you can cost-benefit analysis, what is this prospectus change? I need to sell. If you can understand those basic tools, you will be armed rather than disarmed in the circumstance where you're sitting down going, where should I put my money?
Right. Well, let's talk about third-party risk for a second here, because we throw that around quite a bit.
Yeah, go ahead, TC.
TC, your mic's not working.
Oh.
So let's throw out. Go ahead.
No, we wanted to hear your assessment on that.
Okay, so I'm gonna put it in really, really simple, strange terms. Let's say you've got $20,000, all in crisp new, U.S. dollar minty green fresh bills, and you don't want to keep it at your house, and so you go ahead and you say to your friend, "Hey, listen, I need to store this money at your house for whatever reason until I'm ready for it." And your friend goes, "Okay, I'll store it for you." So at any rate, it's about 2 or 3 years later, you've lost touch with your friend. Your friend moved and didn't even tell you, and suddenly your friend's gone and your cash is gone. Your third party to your cash is gone.
Yeah.
So that's just one example of how third-party risk can affect you. But a contract change is pretty much the same thing as the scenario I described.
Well, and this is the thing where you can't blame your friend for that. You have to look at yourself in the mirror and go, why the hell did I do that? Personal responsibility, guys.
Hey, TC, can I give everybody another example? Here's a more fun example for everybody at home of counterparty risk. So let's say everyone comes over to your house. It's Friday night. It's fun time. We're all going to have some drinks and hang out. We're going to play some poker. So everybody sits down at the table and everybody's throwing their chips down and they're betting and they're betting. And it's great, right? You're having a great time. Turns up 4 aces. You throw them things down. You push in all in. Everybody's all in. Big money win. $300. Everyone, put in $50 or 6 people there, whatever. Now you got $300. You're like, yeah, okay. You go to Joe. You go, hey Joe, give me my $50. He goes, son of a bitch. Here you go. And the next guy, he's like, hey, here's your $50. I was glad to come over. Next guy, you go, oh, yeah, I need my $50. He goes, yeah, I'm a little short this week, so I'm gonna let me write this down. I'm gonna give you my cell phone number. Call me next Friday. That's when I get paid. I get paid every 2 weeks, and I'm gonna give you your $50. That, my friends, is counterparty risk. The piece of paper is $50. It doesn't do anything for you. You all agreed when you sat down at the table at what the buy-in was and what the money was. That was the whole point. You met at an exchange. The things you were trading in this case were cards. The game is called poker. But nothing about what I just said is different than the COMEX or the LBMA or the stock market. Counterparty risk exists the same way. You all enter into the agreement together and play a particular game defined by a set of potentially changeable rules. And at the end, you have to settle up.
Yep.
Settlement is where counterparty risk is realized. So,
well, the house never really gives credit.
Well, the house takes its rake, and that's its job because it provides the wood under which the 4 legs hold the table up that you play the cards on.
Well,
we can have that argument. We can have that argument about why that's there another day.
You give them the money, they give you the chips.
Well, you're gonna confuse the guy who doesn't know the difference between money and chips. So what we're trying to explain to that guy, no, you have to go one step at a time, only because you assume that everyone walks to that same poker table going, I know what 2 aces are. They don't. And that's why some people lose their money and some people win money. Yeah. In a game where you want to make everyone win, in an ocean where you want the tide to rise to lift all boats, you got to start at the bottom. The bottom is the reason you guys all came to the table is based on the confidence agreement that when the hand ended, whoever chipped in would provide the chips, and at the end of all those games the chips would turn into money. And if they don't, that's counterparty risk. That's the risk that you took entering into the poker game to begin with. When you put your $50 in to say, I'll play this poker game, right? That was when you took that risk.
And there's another layer on top of that too, where the person you have to cash your chips out with can change the rules.
Yeah.
And so that's another counterparty in the counterparty risk, a totally reasonable one to point out. The one MFM was trying to point out earlier. You guys have that. I just wanted to give a different example. I thought TC's was good, but I think most people play poker before they would get this one.
Well, I'll add on to that too, right? So you win that $300 hand and you have $300 in poker chips, okay? And then you go to cash out and they go, no, we changed the rules. You can't cash out right now. Come back tomorrow and maybe we'll cash out your poker chips.
Yeah, those aren't the right poker chips for today.
Or maybe for the guys who particularly have a thing with JP Morgan. Maybe it was JP Morgan who lost the $50 and so we're not going to allow any chips to be cashed out today because JP owns 50.
Yeah.
So we'll get back to that tomorrow, and by the time we get back to it, the chips are worth a different amount. But
40. Yeah.
Again, I'm not trying to teach everyone all 75 chapters of this book, because if I try to do that, they're going to get lost at the preface. I'm going to start at chapter 1, and I'm going to work my way through the chapters, and hopefully the people who are out there come on that journey and they'll learn something, and it'll be worth it.
But isn't, Matt, would you agree with me that that's what people are dealing with when they're buying allocated, unallocated? They're buying paper. There's third-party risk there, and it doesn't matter if it's the COMEX or a mint.
Yeah, they're taking their $50, whether it's fiat or it's something else, and they're turning it into the chips, right?
Yep, that's right.
That's actually when they took the risk. When they realized the risk is when they try to turn the chips back into something else.
Right.
But they took the risk at the moment they said, here's my $50, give me some chips.
Yep.
Risk is already done at that point.
Do you guys?
Same way that
All
the
right,
people, the same way that the people, just to put a ribbon on this guy, to put a bow on it, the same way the guy who goes into his local coin shop says, I'm going to buy these eagles, he's taking a risk buying silver with those dollars. It's the same thing. It's all the same thing.
Mm-hmm. Do you guys mind if we switch gears a little bit here? I kind of like our segue since we're talking about personal responsibility anyway. The Coinbase listing today, and I just pulled up whatever was first on Market Watch just so we could have a little headline here, but Coinbase listing has fueled a lot of frenzy and that never ends well. What's the rest of this? Bitcoin Novogratz tells Market Watch. So, and the only reason I want to bring this up is not so much to hype up Coinbase listing or anything. It's not something that I care to invest in. Jim Cramer and many, many others got chewed out today on social media, which I find to be hilarious because they don't want to take responsibility for the investment that they made. They could have waited. We all know that most IPOs, or when something is first listed, it's kind of a pump and dump, right? And the price will settle out later. If you've been following the markets long enough, you would know that. It turns out these other people might have not gotten the same memo, and I think people lost a lot of money today. I just wanted to know if anybody here had any opinions on it. Like, do you think it'll mess with the Bitcoin markets? Does it mess with crypto markets, or is Coinbase just kind of doing its own thing here?
I'm sure there's lots of people.
I do have a few thoughts. Oh, I'm sorry, Matt. Go ahead.
I was going to say, I'm sure lots of people have lots of different opinions. Give you a couple, and then everyone can fill them in, I'm sure.
Okay.
First one is that you're probably going to hear a lot of people thinking, wow, a lot of stocks sold off because people were buying Coinbase. So there's that. Then you're going to hear a lot of people bought Coinbase at 429, and then it went down to 328, and they're not going to like that. And you're also going to hear a whole other chorus on the other side of that spectrum that says, buy the dip, Coinbase, 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 and not just Bitcoin people, regular market people. Understand that Coinbase did more than the CME, right? Like, you know, as an operable business model, whether you believe it or not, right? It's like a carnival when it comes to town. You may not believe that that's going to do 1,000% return, but it is. That's why they came to your town. So I don't think Coinbase is here for something good. I didn't buy it today, but I think Coinbase is here to stay for a while. So a couple quarters, you ought to think about what Coinbase could do.
Well, I was all for buying Coinbase. I did the IPO, and I'm still all for it. If I had the money right now, I'd buy in because I know it's a good value. Like Warren Buffett says, if you hang on to it for a couple of years.
I'm sure Craig has an opinion on it if he's there.
Oh, me?
Well,
did you buy Coinbase today, bro?
Me? No, I'm not. I don't see why would you buy Coinbase? Why not just buy Bitcoin, right?
Free cash flow on the operable business model of an exchange. So just like silver, right? Silver's $25 an ounce. Are you saying to me you wouldn't want to own CME Group 10 years ago? You'd rather own silver 10 years ago?
So I would yeah, that sounds like it's pretty good value. It's valuing at $100 billion, and it sounds like they might do like $8 billion revenue profit.
I wouldn't say hold it or anything, but the volume is more than ICE. The volume's more than CME. If they offered a dividend or something, that might change my opinion. But at a valuation, cash flow, it's like I said, it's like buying Charles Schwab in 1982 or something. Like even if it only lasts for so many years, it's just like the argument I was making to you in the other channel about Bitcoin. Like, Bitcoin's a great trade. I don't know if it's a long-term buy. But that doesn't mean don't buy it now and trade it.
Isn't Coinbase the most popular place to go if you're buying Bitcoin and,
So if you ever
major coins?
If you ever hear Binance is probably bigger. But if you ever hear anybody talk about all the fees that these cryptos charge, and that's a bearish argument against them, who do you think's making the fees?
Yeah. Yeah, it's Coinbase.
Well,
at least in part it's the exchange. So it's a trade. I wouldn't advise anybody to hold that thing long, but there's ways to trade it. There's reasons to.
I would say that I would say here that sometimes being too early can be worse than being wrong.
Yeah.
You know, the whole thing, like,
sometimes
if you know what's coming in the future, you know, the COMEX is going down, and you think silver is going to go up a whole lot, but it takes a year or two.
Yeah.
If you can trade some other stuff in the other time and then throw your money in, you know, before silver becomes impossible to get, or I should say like in 2008.
Or you can do you got more time to do a massive accumulation.
Yeah.
Yeah, I should point out too. Yeah. I should point out too that my investing strategy is very different than everyone's that's out there. I'm kind of aggressive, and I also have this idea that you can invest in everything. So that's you know, maybe that makes me a perma something, perma bear, perma bull. I don't know, but I buy everything because there's also a time to sell everything.
Yeah.
Well, yeah, everything's got a season, you know, basically.
So if you have,
I'd like to say about go ahead, Matt.
I was just going to finish by saying if you have the money, whatever it is, you could take that approach, and if you have the time, right? There's different resources you can hedge as an investor. You can hedge time, you can hedge price, you can hedge risk. You can hedge a lot of different things. That's why I was talking about that 13-year-old kid can make a good investment almost no matter what. But I'll just finish that, right, by saying you can hedge a lot of different ways. So you can go long those things under a different set of conditions than maybe someone else. But go ahead.
We're just going to say about Coinbase. I have a lot of thoughts on this, actually. First of all, Coinbase is here to stay. It doesn't matter if you like it or you don't like it, it's here to stay. And another way of looking at Coinbase is a gateway into the crypto world, and it was probably among the first, at least as far as America is concerned. So I want you to think about it this way. Bitcoin was first. Look at Bitcoin. Coinbase was first. So we don't have enough time yet because they just released their IPO, but I do believe it'll be worth quite a bit of money in the future. Whether or not you're into crypto is irrelevant. You take emotion out of those particular investments. So basically what I'd like to say about Coinbase is I've used it, and like Matt was talking about hedging, I've used it for a hedge. Not the IPO, but used it to buy crypto. That's how I hedge my silver, is with crypto. Now, I haven't bought any in a long time, any crypto. I bought it back in the 2016, 2017 time period. But at the same time, it's been an excellent hedge for precious metals. It's really been a good one, actually. So while metals are still suppressed by the U.S. government and by the banks, the crypto's been going up. So that's something to think about.
I would also argue, actually, as a contrarian to that, TC, that what you just said is a great idea if it were 5 years ago, because now I think the government's going to go the other way. I think the government's coming for crypto. I think the idea that Coinbase is going public is your example. Coinbase is offering itself up to the altars of the SEC. It's going on to the public exchanges.
Yes, they are. Fully legit. Yeah.
And so the transactions, it needs to audit to provide its 13K and its 6K. Yeah. All these other things are crypto. So slowly but surely, it's going to be pretty easy to create the need to regulate certain assets when the underlying exchange for them is a public company.
Well, yeah.
As the contrarian in the room, I would say.
Why do you think that, Chaos, I'm sorry, but I'll just finish by saying, why do you think the CEO came out today, the day they went direct listing, and said the biggest risk to crypto is regulatory?
Agree.
Go ahead, Chaos. Tell him.
I was, just as a contrarian, I think every speculative bubble has a pinnacle. Okay? Yeah. And cryptos have been absolutely on fire lately.
Yeah.
So you have to be careful of where and when the pinnacle is, and you have to kind of take emotion out of it too. So I don't know if this is the pinnacle, but I feel like they're definitely it's definitely like getting riskier to invest.
It feels that way, and if I could butt in for just a moment, I would have thought we would have already been at this pinnacle, right? But when you have things like PayPal and others starting to accept Bitcoin or letting you trade Bitcoin, whatever it is that they're doing, it's opening up the idea more of this could be an everyday thing. And now with Coinbase actually being listed, depending on how this stock performs, that's gonna let us know the future, I think, of cryptocurrency. And someone could say, oh, well, the two aren't tied together at all. I would say this sets in stone for people that might have thought crypto was useless, and maybe it is useless, but guess what? If there's Coinbase being traded on a stock exchange somewhere, that kind of hardens things, right? And it makes your mind think differently about it, even if someone had never thought of Bitcoin before.
Well, I think
it solidifies everything. It solidifies the markets.
Fringe, if you look, you should. I'm sure you can YouTube all the stuff I'm going to say, so you can Google it and all that stuff. You don't have to count on me, but if you go look, you're going to find that forget that it's listed. That's great and all that. That's fucking Burger King, whatever you want to call it. Great. It's branding. The fact is, it did more volume than ICE. It did more volume than the guys you sit here and complain about, the CME. It did more volume than that. Mm-hmm. It collected more fees than them. Okay? So the bottom line that I'm trying to explain is not about us. The most important thing that you can think about when you trade isn't to trade what you want. It's to trade the market you got. The market you got is that the goddamn Coinbase is doing more volume than the ICE. So in free cash flow, will it make more money in the next 6 months than ICE? Done. That's already done. Will it make more than CME? Done. So the question is, will the market value it that way? Under these conditions, 0% interest rates? Mm-hmm. Yes, absolutely it will. So, but that's not necessarily a reason to go long it. That is a reason to trade it. So that's why I was kind of saying what I was saying before. But
yeah, it's pretty underpriced for a growth stock. I mean, its P ratio
exactly.
is like 12
it's a tech stock.
or something. Yeah, it should have a P ratio of like 30 or 50 with its growth rate, you know?
200. I mean, look at
easily 200. Tesla's 1,000.
Hey, hey, you think the CME is important? Great. They can list commodities. Imagine an exchange that can list commodities that anyone in the world can create an infinite supply of. Well, then they got a lot of shit they could trade and make volume on. They can literally make products tomorrow. And then imagine they start supporting options. Oh, well. So forget that. Again, it's a tradable asset. That's not the important point. The thing I want to cover over to Chaos said is he was kind of doing a thing a lot of people do, kind of pigeonholing crypto into one thing. Like Bitcoin is one thing, and I think that I've had, and Craig will, he can chime in on what I said in the other channel there too. I don't think Bitcoin is going to do the same thing as Coinbase or crypto, because I think if you understand the technological side of it, there's a lot of different stuff there. There's proof of stake. There's the capacity to transfer assets in a smart contract. There's ER20 tokens to trade, right? NFTs. There's a ton of different stuff going on there. In our lifetimes, we might not be able to prospectively come up with what that means as an investment strategy, but that doesn't mean there's not a long-term investment strategy. So I think things like Ethereum and ER20 token base that can be infinitely expanded and infinitely inflated are also juxtaposed against the idea that they can be infinitely purposed. Mm-hmm. And so what you have to do, like a stock, is understand the fundamentals around a given crypto, understand, again, the risk you're taking in buying it or the exchange that you're buying it on, all the normal stuff, and then pull the trigger. And if I told you that the stock market was invented 10 years ago or 20 years ago, and you could buy some of the first stocks that ever existed, or the exchange that they were all listed on, mm-hmm. you'd probably want to buy that.
Yeah, you want to buy the exchange, yeah.
And that's what Coinbase and cryptos right now are. So even if you took $1,000 and put 10 on each of them, and took $100 out of that and put it in Coinbase and some fractional on whoever you want, it'll probably end up being money it'll probably end up being a win long term.
Well, you're getting a fraction of every fraction and every transaction, aren't you? You know, even if, albeit it's a tiny fraction of every transaction, a millionth or a billionth, whatever.
But I mean, at the end of the day, what I'm saying is there's a reasonable price for every lottery ticket. Coinbase is a lottery ticket, and if you can take a small enough amount, it's probably worth buying that lottery ticket.
Oh, I agree. It's a good deal. Yeah.
Well, there's inherently less risk investing in the platform opposed to one specific coin, too.
That's true too, because what happens when I don't think that this day will come, but people say, oh, Bitcoin's going to get left in the dust and this is going to take over. Well, if you're invested in Coinbase, then it doesn't really matter. And let me throw maybe an interesting question out here. They probably sell your data already, but we know data's worth more than oil. So now that it's listed, if they weren't selling data yet, I can promise you they will be, and that's extremely profitable. Yeah, go ahead.
Well, I've seen some IPOs in the last few years that really didn't make sense, and it flopped.
Go ahead, lady.
And I don't think Coinbase is going to be one of them that's going to flop. You know.
Tell them, Mighty. What do you know?
I don't know nothing. The longer I live, the more I find out. The less I know. You know.
Wait a minute. Mighty knows something about the social analysis side of this.
I know with Coinbase they do share data a lot with the tax man. I definitely know that for sure.
With the tax man, hell yeah.
Yeah, well, it makes sense because they have to. Again, like I was saying, to clear trades with the SEC and the IRS to return what you're going to call your revenue, you'd have to be able to explain that. So that makes sense. But Mighty, who else might they share it with?
Anyone really who wishes to pay for them.
Right, the marketing value.
If they've shared it once, they'll share it again, especially for a price.
I'm sure AWS would love to know, because if Amazon has the ability to do it, they are going to buy as much data as they can from Coinbase, and they are probably going to come up with something that they think could be superior to what Coinbase does today. And I only say that because that's how Amazon works. They'll give you a hell of a lot of money for some data, but then they're also going to be able to create their own superior product later.
One other thing to consider is what the revenue might do during the bear market.
Okay, yeah.
Hey, people got to make money because people got to sell, but
yeah,
you know, but you know, things get boring for a while. It's possible that revenues could languish.
Well, one.
I'd like to argue that there may not be down markets anymore, gang. If the Fed keeps printing money and the central banks all around the world keep printing money, we may not have down markets anymore. Look at Venezuela; their stock market's doing awesome.
I think Bitcoin will definitely have some down markets, and I think if you watch for a while the VIX, you're going to find out what a down market looks like in the next couple months over the summer. Call this the summer of love. But hey, Craig, I'd be interested to see what you think of the idea that there are some cryptos that, of course, the way Coinbase works, they shred some of what you'd call a reward. So basically, they collect dividends from the assets that they exchange. So even in a bear, doesn't that kind of backstop some of it?
Plus, sure, yeah. You know, you could stake your Cardano and get an 8% yield.
On the Atomic wallet. So.
You know, you could stake Tron, get like a 5% yield.
But what I'm saying is on Coinbase, bro, they shred it. So in other words, if Cardano's 8, you only get 7 on Coinbase because they take a percent.
Yeah, they'll take the cut. I'm sure. Yeah.
Well, so that's what I'm saying. They do. So even in a bear, they're still making that on any wallet that's out there.
Yeah, that's true. But, you know, there might be less interest if less people own it in general.
Yeah. They collect the fees on the sale, but they're long it in the sense that anyone holding it, they collect part of the fee from.
Sure, you know.
It's a similar business strategy to like a PayPal, isn't it?
It's actually just like the CME. So it's just like a commodity exchange trading futures and options, right? They get money if you sell the principal on the trade. They get money if you're on margin to hold. The same way. If I'm holding Cardano and I get 8%, but they take 1%, it's the same as if I'm on margin and they get 1% for me to subordinate. It's no different.
You should just stake your coins yourself. Don't give Coinbase a cut.
Yeah, you could do that too. Right? You can put them in a different.
the same concept with precious metals. Ken, if you have crypto, put it in your own wallet. Don't let someone else hold it for you. Third party risk.
Well,
I agree.
Yeah, I'm sure there's lots of crypto guys who agree, but I would just say to you, like, if you're managing an overall portfolio, one thing you can do is use precious metals as the opposite, right? Don't go all in on crypto in your own digital wallet and lose your fucking password or drop your hard drive, right? Buy silver, put your crypto on Coinbase, and then you can balance those two things out, because if things don't work out with Coinbase, you got what's in the vault. If things don't work out what's in the vault, you got what's on Coinbase. So that's just me. I'm not saying that's for everybody, but that's one way you can use the two assets to trade their interdimensionality, the distinct capabilities that they each have.
You don't need Coinbase to trade crypto. There's tons of swap sites and decentralized exchanges and offshore exchanges out there. And
yeah, but you're
There's even wallets.
Yeah, but we were talking about this in the other channel. I think you're doing this thing again where you think like everybody's, running a node on their Linux machine. Like that's not happening. People aren't doing all that. They're going to have Coinbase on their iPhone.
I wanted what TC said, where he's hedging precious metals with crypto, but I don't know if that's a true hedge, is it? Because couldn't they both go up, or alternatively both go down together?
Well, no, they don't. Not really. And it's more from a psychological point of view, maybe even philosophical. I understand go ahead.
No, I was going to say, TC, to sort of back that question up, aren't you hedging it exactly the way I just described? You're hedging the two dimensions of the asset. One you can hold physically, but one you can move with your phone. So you hold physical precious metals for having no counterparty risk, and you hold crypto to have some counterparty risk, but additional transportability.
Well, not exactly. The hedging is interesting, and it's worth actually people understanding my thinking and what took me here. But it's really simple. It's a basic understanding. First off, this is the most important part. I don't know when the U.S. Treasury is going to stop working with the banks to keep down the price of precious metals. So that's first. Second, going to really, really take off. But I do know one thing for sure. The government wants everyone in crypto. So I'll be rewarded for being in crypto. But as far as precious metals goes, the government is punishing me for being in precious metals because they are still holding down the price. And there's no stopping that at this point in time yet. I think this is coming real soon because of Wall Street Silver. But but the hedge goes further than just having crypto. I don't only have crypto, I also stake crypto, and I also mine crypto. So I'm doing all three things. So that may answer your question in a little more detail than you probably were thinking of, Matt. But it's not for, literally having something that where there might be third-party risk. I do wallets. I don't hold stuff on exchanges.
Yeah, so, that's holy moly because you mine crypto.
Yeah. So I do it in all ways. And but by the way,
No, I want to follow up there. So you mine crypto. You mine crypto in the U.S.?
I do.
Man, you're getting hurt. Okay, I don't want to ask more than I need to, but how? Is it Bitcoin or is it alts?
No, it's Ethereum.
Okay, so it's ER2. It's ER20 tokens. I got it.
Yeah. So that's what I'm mining, and it is worth it financially. Getting all the stuff, I did that. Basically we're talking about video cards, really nice video cards, expensive. Those were purchased years ago. And so I'm not buying today's prices. I was buying in, 2017 prices, 2016, 2017 prices. It was significantly cheaper to get all the equipment. Buying the equipment now, it probably wouldn't be worth it. But I do have it, so that's what I'm doing. I'm mining, I'm staking, and I'm holding crypto. And that has done. Go ahead.
Do you actually care to say which coins?
Well, I'll talk a little bit about some of the coins I have. I have Bitcoin, of course. Okay. I have Ethereum.
I think he wants to know, what are you mining specifically?
Yeah, that
Fringe Ethereum. I'm mining Ethereum.
So straight up Ether. Okay.
That's correct.
I thought you were mining tokens. Okay, so you're mining Ethereum. Interesting. Okay.
So,
please go on.
Yep. I'm not going to go into all the details because it gets technical, and maybe we can make this, another podcast sometime. But the technical details of mining and what it costs to get in, and what the cost-benefit analysis is once you're in and your stuff is paid off, it's all relative wherever you are, based on the price of your electricity. For me, it's profitable.
That's why I said that's why I made like a sort of a side comment, like you're getting killed, because the worst place in the world to mine from an electricity perspective is the United States. Ukraine mines for 1/5 the price. So I mean, there's lots of places in the world to mine crypto. I just was surprised. Forgive me.
So at any rate, the hedge. Let's get back to the hedge part, just so everyone understands my point of view. By the way, I am a silver guy. I have been for 35 years.
Amen.
So I love silver, and I will never, ever, ever get rid of my silver. I'll sell my crypto. I have no problem doing that. Silver is for what comes next in the next paradigm, so everyone understands that. I have an exit strategy for getting out of crypto. So I'm not hanging on to it, for dear life or hodling beyond what my goals were.
So this is a weird question for another podcast, but what are you going to do with all the friggin' mining equipment?
I'll be selling it.
Oh, okay. All right, gotcha. Okay.
And so that's the thing, is the best time to sell it is at the peak of the crypto market, whenever crypto is, near its highest. So, basically I'll have to figure that out too. But you literally sell these cards and get virtually what you paid for them, even though you've been using them for mining.
Yeah, I've been using cards for like 6 years now, and I'm selling some of these cards for more than twice.
Yeah.
Some of the gains are actually crazy. In the bear market, you get a used RX 580 for like $80. Now you can sell it for like $500-600. You almost get a 10-bagger on some of this hardware.
Yeah,
it's true actually. Right now, if you sell stuff like graphics cards, are way more expensive.
Ladies and gentlemen, welcome to, this is deep levels of capital management here. Ladies and gentlemen.
Right. And then that staking reward is going to be more than we were ever making mining, probably, after mining for 7 years. And then, then we don't need to mine it all anymore, and we'll get a bigger income.
Yep. So, but my point is this. The silver I keep that until the new paradigm starts, and then I'll figure out income-producing assets to get with my silver and retire, what have you. But the crypto is for until we get that final break in the paper to physical price, and the U.S. Treasury and the banks stop manipulating the price.
So can I provide a third-party view of what TC's financial outlook is? He is basically his own central bank holding silver as a reserve and running a mining company with those reserves of Ethereum, ladies and gentlemen. So I just and he's about to top out somewhere here and sell you his capital. And retire.
All right, so guys,
if there's anyone who has investment advice to give you, you should listen to TC, I guess.
Whoa, none of us are financial advisors. Invest at your own risk. But I do have something interesting on the screen here, and this was tweeted out on April 12th, so just 2 days ago. So at $64,000, Bitcoin became the 6th largest currency in the world, and it overtakes the British pound sterling in size. What do you guys think about that? Because I know we're going to have a lot of haters on crypto out here eventually. But I wanted the channel to be Wall Street Stackers because I just want to hear, what do you invest in and why do you think it's a good idea? When I read this, that tells me it's serious.
The smallest Hey, Craig, no, the better way to look at that is the other way. The smallest ER20 token market cap is bigger than some of the medium-sized countries.
Yeah, but it's easy to take over a medium-sized country. I mean, this is comparing it to the British pound.
You could put some of them together. That's how. But I mean, I can go event if you want later. I mean, it's kind of 10:30, so it's late on a Wednesday. But if you want later, I'll invent one of those ER20 tokens for you. Okay, it's easy, and they have more market cap than some medium-sized countries.
Chaos,
yeah, so
what were
a
you
lot of
gonna
these
say?
projects are way overvalued, and when the bubble pops, a lot of them will crater. For sure, but it's same old.
The main issue I have with Bitcoin is so it's become that large of a currency, right? But you're paying astronomical fees right now, so it's not really
Well, the fees aren't
its utility has kind of gone out the window with all of the fees, because the original utility of it was an easier way to transfer money, right? Like currency units. But if you're paying astronomical fees, is it really that easy to transfer your currency around?
Sounds a lot like inflation.
So I just wanted to point out that in 2017, fees, the wait time is like a long time, like a whole day, and maybe you pay a $40 fee. But today, after the SegWit upgrade, you could pay like a $3 fee, move $10,000 in 10 minutes, and our traffic on the number of transactions being done is still way higher than 2017. So there have been scalability upgrades. It just hasn't been able to keep pace with the demand.
That's a 3% transaction fee. That's 3%, inflation.
No, $3 out of
out of 100. You said that's 3%.
Well, I said 10,000.
Oh, $3 out of a $10,000 transaction.
But is it just a $3 fee standard? So it doesn't matter how much you transfer.
Agree. I don't.
What if you only had to transfer $3? Now it's 100% fee.
Oh yeah, forget it. I'm talking about Bitcoin. Ethereum, the fees are astronomical right now.
Yeah, but to your average person, I want to go get a cup of coffee, right? And you're telling me I have to pay a $3 fee to buy a cup of coffee?
People. You shouldn't use Ethereum to buy a cup of coffee.
That's my point, right? So it can't.
Bitcoin Cash.
It's kind of limited because they have to sort out the fee issue.
I think Monero is your better currency, right? Because it's more fungible. Okay, and I feel like if you're making the compromise of not going with Bitcoin for those reasons, then I think that you're better off going with Monero because its inflation rate is competitive with Bitcoin. It's very competitive. So if you're going to do something that's not Bitcoin, why not get the extra benefit of the privacy and the fungibility that Monero offers?
Correct. But there's one thing you're missing out on. Monero isn't accepted anywhere, so it's not really a good store payment or a form of payment. Sorry.
Is it used on the dark web?
Yeah, you can go on the dark web, but where else can you buy something with?
Well, but hold on. All I'm saying is that's how Bitcoin started on Silk Road. That's what made Bitcoin huge, and so the same thing could happen to Monero.
You say for the privacy aspect, but this once again, I'm a Bitcoin Cash bot as well as Bitcoin. But with Bitcoin Cash, you can still make it private. You can do stuff with Coin Fusion, where it splits the transaction up into tiny little fees, and it concludes it all into one. So it still has that on Monero.
What's Coin Fusion? Is that a coin join or?
Look into it. It's a bit complicated for me to explain on stream, but yeah, on the podcast. Sorry.
So yeah, if you use a coin join, you could tell that your coins have been joined, and regulatory requirements could easily make it so that you're not allowed to accept coin-joined coins.
Hey, Craig, I'm lost, and someone else watching this in the future will probably be lost. What the hell is a coin join?
So a coin join is like it's a decentralized Bitcoin mixer.
Okay. Okay.
Right, and now you could tell a coin came out of a coin join based on its history.
Mm-hmm.
And now there's new regulations where you're not allowed to accept coins that have been coin joined. If you coin join your coins, that will set off a red flag, and then they'll come after you. So Monero doesn't have this problem. So this fungibility issue is an existential threat, I think, to all the non-private coins, Bitcoin, Bitcoin Cash, all of them. I think it's the main existential threat. I know everyone's preoccupied with fees and everything, but I think this is the bigger issue that you need to worry about. And Monero fees are pretty low, also. So why not use Monero instead?
Just to address what you just said, right? It's become the 6th largest currency globally, but I can't buy a cup of coffee with it without paying ridiculous fees. But the other top 5 currencies, I could easily buy a cup of coffee with, But like, I'm just pointing out, like, there is underlying issues still with Bitcoin.
Do we think that as technology gets better and faster, that those fees start to come down, though? Isn't everyone trying to work to do that?
Can I just conclude one thing?
Yeah.
Remember, one of the biggest things what people don't talk about is acceptance.
Mm-hmm.
And when it comes to it, you may have a social media platform that's a hell of a lot better than Facebook, but Facebook's more accepted and more people go on it. That's what gives it a network effect. And you got to think whether something will have that network effect. That's what I'm trying to put across.
Mm-hmm.
Yeah, but they still don't have good solutions for the fees, right? Like, until they come out with a good solution to solve that problem, it's going to continue to remain a problem.
I'm just going to put out there that, Bitcoin is version 1. I mean, it is the quite literal progenitor of all other cryptocurrencies.
Yeah.
It is version 1. Version 1 of anything really sucks.
But they have made upgrades, right? And I'm saying the upgrades are slow because people are trying to be really careful with $1 trillion of value. And when they make these upgrades, they need to be, thought about very carefully. So it is on the path to scalability. Taproot's going to improve scalability to a degree. None of these things, of course, fix the privacy issue, but there are improvements in the pipeline, and they're coming. They're just very slow.
But the other,
I mean, look how long we've been waiting for Ethereum 2.0. We've been talking about it for 5 years now.
Okay.
Yeah.
100%. And one thing, Craig, the one thing you got to think about with Bitcoin especially is whenever there's a change in whatever happens in the network, there's always a brain drain. There's always people who leave the project. So you've got to think about that as well. So the more development what happens, more of the people who have been in that project for a long time leave the project.
Is that so? I don't know. I mean,
Think about it. Think about everything. Think about every time Bitcoin's developed, people have left.
Yeah, there's the group splits
Can
up
I
a
just
bit.
ask a quick question? Because this is sort of like a disciplinarian question from someone in the discipline. Do any of you actually work on technology that are sitting here talking about how technological teams develop and do things and work and how they react to change?
Yeah.
Conjecture. What kind of do you?
Well, I mean, I work in technology. I'm a computer programmer.
Who said they worked in software?
I do.
I've done software.
So then Jay, good. Then you'll be able to provide some perspective on what they're saying. Is there a high turnaround during project success, like in a startup?
That part, I think, is like totally dependent on the projects. I really don't have insight on that, but just hope they have good onboarding and good documentation in terms of like new people joining the project.
But so think about it. What do you do? Waterfall, agile?
God, I hope it's not agile. Yeah, you want to be agile. You don't want to be waterfall.
Okay, so you're an agile. Now I'm asking you, what do you do? Waterfall or agile?
Agile, like legit.
Okay, good. So you're agile. So that's what I'm trying to ask you. So if you're agile, at the end of a good sprint, are you leaving or staying?
No. What? I'm staying for at least 6 to 8 months.
Oh, okay.
How long it takes.
Right. So to his point, he's saying there's turnover during success periods in a given coin development. Would you agree with that, given what you just said?
Well, I mean, that can still happen. Like if you have a tech lead that's been on a project for like, let's say 2 years and he leaves, that's a lot of knowledge that's just gone.
I gotcha. Okay. But do you think that impairs the entire development?
No, life goes on.
Right. But so that's the point I'm trying to make. I actually think that Mighty was making a good point about what can happen, but I don't think it's material from an investment perspective. I also don't think people who would trade that coin are sitting going, "Oh, tech lead left."
You probably don't even know. Yeah.
Exactly.
So we've actually got a aviation in chat. He said he'll be right back, but I know that myself, aviation, and TC are into XRP, and not as of recently, but like from years and years ago. Does anybody have any feelings on XRP? I kind of have a love-hate myself.
I think it's a monster that's yet to explode again.
What do you mean by that, Mighty?
Once again, I absolutely hate the project, so I don't want to come from a stance where I like it. But I think it's a monster what's been suppressed on purpose, and I think once this SEC case gets pushed through, you can expect the price to go parabolic.
Yeah, I could agree with that. My love-hate comes from the fact that
French.
It seems like it could be a banker's coin. And even if it's not the bankers, just for global trade, it seems like it could be their thing. So I do expect a lot of restrictions there. There's absolutely no privacy, and it's not necessarily a coin, guys. It is a token. So there's a difference there as well. But it was built to be some form of currency, it seems, like that would actually be used. And now we'll just have to wait to see if that happens.
Well,
Yep.
Ripple is not a cryptocurrency. Ripple is not a distributed ledger.
Mm-hmm.
Ripple is a centralized database.
Yeah, they separated themselves long ago, but XRP is there. I'll just have to see what happens, I guess. TC, what's your opinion on all that?
Well, I'll tell you what. I'll tell you what I told the chat, basically, because I was against Ripple. Very, very vocally, by the way. Very vocally against Ripple. But the second time they were shut down by the SEC, or at least delisted, shut down is not proper. I was able to think around a couple of the things that they were doing. It was the second time they were accusing them of the same thing. Mm-hmm. And you have to understand, from my point of view, I have a very firm belief and faith that is unshakable in how corrupt the U.S. government is, the SEC, the Security and Exchange Commission, the COMEX, the banks. I mean, I just know in my heart they're just deeply corrupt. And Ripple is no exception to that. Ripple is also corrupt because there are corrupt people running it. Some of the slimiest people in banking run Ripple. So that tells me it's going to do just fine. And with that delisting, right before it delisted, I went ahead and bought in kind of big in Ripple at 20 cents. And that was December 29th, I think. I don't remember the exact day. If you guys want to look on a chart, I believe it was 20.2 cents to 20.6 cents is
TC.
where all my buy-ins were. Yeah.
I think, you got in around 29th and 27th. Those were the dates. I remember looking for you.
Okay. Gotcha. Thank you. And I didn't physically sit there and buy. I set limits and let it buy, and it all got bought up. Yeah. So therefore, I don't know the exact date and time. However, it is my belief that Ripple is going to be cleared by the SEC after paying probably a fine, and they'll be allowed to trade again, and they will go back to their all-time high of $3.40 or something like that, and far surpass it. And my goal was to do this. I exchanged Litecoin for Ripple. Litecoin is kind of a zero-sum game for those of us who actually have Litecoin in our wallets. It's one of the worst performing coins we have, unfortunately. It doesn't mean it does bad. It just doesn't do really good. So I exchanged that at $125 per Litecoin, went into Ripple at 20 cents. Now Litecoin's like $250, and Ripple, last time I looked at it, was like $1.80. So it's been a very good trade so far. I am doing it for one reason and one reason only: to pay off debt. And the banks are going to actually help me pay off debt, because what I knew would happen when they when they delisted Ripple, it was a shakedown, in my opinion. That's all it was, pure and simple, a shakedown.
I think so.
And it's so big in its scope that the SEC is in on the shakedown. The banks are in on the shakedown. Ripple is in on the shakedown, is my opinion. So I believe Ripple has a lot of wonderful places to go. It's going to go up a lot higher because it's, like I said, it's a banker coin, in my opinion. And it will do quite well. And I'm going to have the bankers who are buying in right now while it's delisted in the United States and it's supposedly not going anywhere and it's supposedly in a whole bunch of trouble. It's been skyrocketing. And so I think these are the banks buying in before they let the news out that the SEC has cleared Ripple of any wrongdoing, or I'm sorry, more specifically, slaps their hands and gives them a $2 million or $4 million fine. And then it goes to the moon. I pay off all my debt, and I guess everything ends happily ever after.
Yeah. All right. Well, before we get out of here tonight, let me fill you in on some stuff in case you didn't see it. Did anybody see that Doge hit 12 cents? Did it go past 12 cents? Does anybody know?
13 cents.
13 fucking cents. Right? All right. Are there any fundamentals here? What is happening? Is there just hype getting into anything?
I'll tell you all about Dogecoin. I'm the Dogecoin expert. All right. So basically, none of the other coins have any cartoon dog meme. Okay. Dogecoin is the only coin that has a cartoon dog meme.
Fundamentals.
So So what else do you need to know?
All I know is my partner still has he hasn't sold his share because diamond hands forever, whatever that means. And
well, wait, Fringe, before he takes out his diamond, it isn't a cartoon dog. It's a real ass dog.
It was a real dog. You have a point there.
Yeah, it's a real. I mean, I wouldn't invest in this thing with a 10-foot pole attached, but it's a real dog. Look at. I mean, it's a dog. It's a Shinubu. What the hell is that thing called?
Shiba Inu.
Shiba Inu.
Yeah,
something.
Thank you. I apologize for my inability to pronounce it, but it is a real dog. Give credit where credit is due.
No, the original meme is a real dog, but now it's cartoon.
Yeah.
Well, I'm sure. Okay, I'm sure people want to promote the real dog with a cartoon, but he is a real dog.
All right, guys. Well, I think that's going to wrap up our stream tonight. That's our lesson on fundamentals. If there's a dog, obviously you have to invest.
Poge.
So, did you say Poge or Doge?
No, there's a new coin called Hoge.
Hoge.
It's basically a Doge. And then there's another one called...
Hoge.
I forgot the other one.
Oh my god. All right. I'm done. I'm going to get us an outro going here. I'll join you guys back in the Discord in just a moment. Thanks for hanging out with me tonight, guys. I really appreciate it. Bye, guys. All right, guys. Well, that concludes the, I guess, the first podcast stream for Wall Street Stackers. I got a little carried away on some other topics. Sorry it ran a little bit long. But it was fun, and I guess we got to learn about the fundamentals of if there's a dog on the coin, then obviously you must buy. Don't take any of that as financial advice. No one here is a financial advisor. Do all of your own due diligence, and I will see you guys later.